Welcome everyone to this webinar. As usual, my pleasure to be here with you all guys. I would love to start saying that when we start this project of inviting guests in the beginner's corner, right? The idea was to share with all you the different ways of approaching to the market, the different people has, right? Where every expert or every trader has its own way to approach to the market. The more these webinars develop, the more guests that we have in here, I found out that one of the most things we have in common. And another interesting thing that I found out over these last 10 webinars we have made with guests, sorry, is the fact that we all start with the most important things when we use webinars. I don't know if you have realized ever listening with to the FX Street experts and their comments, how many interesting, important, and relevant tips we, the ones that are of this side of the screen, give you when the webinar starts. I'm really planning to do a whole webinar full of nothing else but those tips and important things, and I hope it will be recorded so you can run back to it every time you want it. Anyway, today we are going to talk a bit about what Adam Rosen discussed a couple of weeks ago on how to develop a simple trading strategy, right? There's a big difference in between traders that had been in the market more than 10 years than the ones that had been maybe less than that, maybe 5 or 3 years in the market, right? Because believe it or not, 10, 15, 20 years ago, there was not, and the forex was not so popular. And beyond that, right, the million thousands of tools we have today to work with the forex market, right, they were not available, right? So one of those common things all of the exposures here have shown to have in common is the fact that along their careers, okay, they have tried, even me, on good at me, of course, we have tried a lot of trading strategies, right? We have tried a different market approach and only to end up coming to the one big conclusion that any single market approach you have tried, right, is not the best. It's not the best, not the worst. The one that is completely valid, the one that will give you the chance to succeed in the stock market is the approach that you figure by your own, right? The approach that you figure by your own. The trading strategy or the trading method or the system you plan will depend on how you develop it and make it. I always said when we started webinars, right? Regardless what anyone in this side of the screen is telling you at that side of the screen, nothing is good enough until you test it in your own uh, account or broker, right? And you prove that that system actually works, and you understand, in fact, what you are doing there. Okay. Anyway, in terms of trading, right? Running an account is, as Aaron says, like running a small business, okay? And kind of professional, right? Anyone needs months and months of training on development and education. One of the first things Adam remarked to start developing this simple strategy is the idea that we have to understand in which market conditions we are working, right? The market has unlimited possibilities, right? We have pairs trading in range, then pairs trading in a strong trend. We have a lot of changes in intraday volatility, in monthly volatility. We have also lot variations in volume. And may I add, from my personal perspective, we also have market sentiment, right? You know that over the past, I would say, at least 3 years, sentiment has been ruling the market. It's the mass sentiment what rules the market and what pushes or determines the movement in major crosses, right? So the advantage maybe we can have in the stock market, right? It's like with a couple of single tools and taking a look at the chart, we can determine several of these market conditions, right? And then decide to apply a certain trading strategy according to the circumstances we are seeing, right? In fact, the trading strategy, and we are going to discuss this a bit more practically in a few minutes, right? In fact, it's not the strategy what we choose what really matters. What really matters is the performance of the strategy, right? And the strategy by itself is not going to give us the results, right? It's us and the strategy together, because the strategy could be amazingly great, right? But if you fail to take all the tricks the strategy is suggesting you, if you fail to follow all the rules, if you fail in anything, the strategy will also fail, right? So the strategy and the trader are a team, okay? Two sides of the same coin, let's say, okay? So considering the fact, as we said, that we have different market conditions, will be the first thing we need to know. Understand the market has different things, and we need to adjust to all of them. The second thing that we need to do when approaching to the market and start developing this simple strategy that will help us to get success, right, is just one or maybe two technical indicators. Why one, why two, why not more? Because if you overload your chart with different trading tools, right, the most likely is that they will never align all at the same time and in the same direction. Usually, one may be a bit too poor, and two will be exactly enough. I usually use not much more of 4 indicators in my chart, but more than that. I use them for different time frames, meaning I take a look at a couple of those indicators in bigger time frames, and I take a look at the other couple of those indicators in smaller time frames. I could separate charts, right? I could say, well, okay, I will plot these two indicators in this shorter term chart, and I will open the chart of this same currency pair, right, in a longer time frame, on a bigger time frame, and plot two other indicators. That's a matter of taste, okay? Everyone can do how it please, and I'd rather look at the 4 indicators and just have the 4 indicators and have just one chart, right? And ignore 2 in the smaller time frames, and ignore the other 2 in bigger time frames, right? But anyway, it's not how you cross indicator, it's not the indicator you use, it's how you learn to use it. Anyway, once you choose those type of indicators, right, you can analyze market conditions in daily charts. You don't need indicators to analyze market conditions, right? As we said, we can discriminate just taking a look at sometimes just taking a look at the chart if we are in a high volatile day, or we have low volumes in the market, if the currency pair we are studying is moving in trend, or if that currency pair is in fact in range, right? Just taking a look at that, okay, we can determine several market conditions. Just taking a look at the chart with no indicators, right? So once you analyze, you identify the trend, right? I believe that there's no simple way than using trend lines to identify the trend, right? In the daily chart, you can move to smaller time frames to take trades, right? The concept also applies in the longer term. If you are going to trade on daily charts, then you rather analyze market conditions in the weekly or in the monthly chart, right? In bigger time frames. Always analyze the market conditions in a bigger time frame than the one you are attempting to trade, okay? To what I was saying, the fact is that we tend to analyze market conditions in bigger time frames, right? And apply trading strategy in smaller. One of the things that Adam said in this webinar that I do consider a very important tip and something we should never forget is the fact that if you choose to move it to, 1 hour, 4 hours, or 15 minutes, the fact is there is no right or wrong answer, right? Although we know that the bigger the chart, the clearer are the signals in the indicators, usually, right? The fact is that we can trade in any time frame. That will depend on our own trading style and not, okay, and will not affect our trading results, right? Anyway, after we choose one or maybe two indicators to plot in our chart, right? The first thing to try to develop our trading strategy would be open a demo account for 30 days, and start a regular. I know 99% of us in this side of the screen again recommend you to open a demo account for 30 days and start a regular. What I believe is even better, is after you have spent 30 days in the demo, open a mini lot account. Open one of those accounts with, I don't know, $100, $200, $500 most, where one pip equals 10 cents, right? Those small accounts, right? Mini lot accounts, right? If you lose them, you will be losing money you can afford to lose. Okay? Remember, one of the first things you heard when you approach the first market is that you cannot risk money that you cannot afford to lose. Because we like it or not, this is a high risk market. Okay? So, my idea is that when we open a demo account, right? We open a demo account, one, to test our trading strategies, right? But we usually go a bit wild when we use them accounts, right? We may take trades that are not properly signaled by our trading strategy, but because of gaps we have, or maybe because we are feeling lucky, or whatever, right? Those are the things that we do with demo accounts. I usually say it's pretty easy to duplicate the demo account. It's not the same that to do with real money. Why? Because you can gamble with that and won't affect your life, your savings, your capital. Okay, in the demo. So that's why I always say that after testing a strategy in a demo account, trade in a mini at lot one. Trade in an account where each pip equals small amounts of cents, right? And you will feel the pain if you do something silly and lose money. So then that exercise of trading, right, is what we all need, okay, to succeed. We need the experience of pressing the button, of placing the order, of placing the stop and the limit, of taking the position out when we know the market reverse, or the training of moving our stop higher if the trend extends, right? And I believe that you may be better able to control your feelings and sentiments, right? And the balance in between greed and fear, right? With a real money account, regardless how small it is, right? That with a demo. With a demo, we don't we don't manage greed and fear. We have no fear and we are extremely greedy. So when it comes to a real account, okay, real money, okay, then we turn upside down, right? We are extremely fearful, right? And the greed came to a point where either is subdued by the fear, right? Or make us burn the account, right? Anyway, once you have that demo account, the first movement will be no doubt straight for a demo. Trade in a demo for 30 days, right? The best thing you can do is focus on a couple of currency neighbors, right? There's no need to trade the 40, 50, 100, 2,000 currency pairs a certain platform or broker is offering you, right? I always said that it's better to start analyzing or testing one, the most two currency pairs at a time, okay? Always keep in mind that each currency has its own behavior, has its own economic policy, right? It has its own intraday range, okay? There's a lot of conditions that change, okay? in a certain regarding a certain currency, not a pair, a certain currency, right? So a strategy that may be profitable to certain ones may not apply to others. So start testing, a couple of pairs most that you feel familiar with. Uh, the fact is that to test the strategy, we should place as many trades as possible, right? I usually set at 200 would be the best, right? Because you have a higher sample of trades, okay, of results, right, to determine a probable trend in that combination of indicators behavior, okay? I would say 50 is the minimum, and 200 will be the best to start with, okay? Uh, I will add to this that Adam suggests something pretty interesting. I have never did it, okay? That he takes the same order with multiple stops and limits orders. Why? Because to determine how much, for example, if I can retrace before moving forward in another direction, where what is the maximum or minimum profit you can take from that trade, right? And in this particular case, plotting multiple stops and limits, you will not have the need to determine it by yourself. It's a pretty substantive number determining a stop or a limit in this particular case, right? But it's a good guide. Anyway, all of these results, right, should be tracked by putting them in an Excel sheet. And here's what it comes when I told you that the older traders did things differently than the younger ones. Well, here too, I also did a lot of backtesting and all the results in Excel sheets. And thank God I'm not from the ages when they were doing it by hand in paper and pen. But there's a lot of us that have based our trading careers in plotting results of our strategies in Excel sheets. Okay? So now that you have all your results in there, right, you can sort the results to analyze the better settings. Maybe a stop of 100 with a profit of 200 is way too much. But maybe a stop of 50 with, I don't know, a limit of 70 is the best trade for that simple strategy you have used, right? It's very important. Anyway, he added also something very, very interesting that it's so well and so easy and so common true, right? That we usually say to mention when we trade, right? You see a daily basis. There are different times of the day when you see the market is fully active, and there are other times of the day when you see that the market is totally inactive. There's practically no reaction, and you can see a certain currency pair moving in 10, 15 pips hour after hour, right? So, according to his experience, he says that this time, right, these that you are seeing now on the screen are the best hours to trade because are the ones more active. He says something pretty, pretty obvious, and I believe we all should remember that in the United States by lunchtime, right? We have very low values, and why is that? Why? Because everyone's lunching, right? Everyone's having lunch, so we need to order our Excel sheet, right, to see also which time of the day we get the best profit. Okay? Because maybe the strategy is great, but when you test it 24/7, for example, right, and the final result is great, but that 24/7 but tested automatically or mechanically, not by hand as we are suggesting here, right? The fact is that in that particular case, that trade happens to take place by the time you're sleeping, 2 a.m. in the morning in your country, or the time that you are working, because you don't work the full 24 hours. So that's why it's important not only to test the strategy, but also see when those trades, the profitable ones, took place, which time of the day, right? Anyway, moving a bit on with this thing of testing a strategy, and then we're going to see a couple of interesting short-term, long-term, mid-term trading strategy you may find all useful, right? The fact is that when you test a certain trading strategy, no matter which one, indicator is not important again, but really important. It's important is how you understand the use of the indicator, right? When you do this all testing and the all spreadsheet thing in Excel, right, you will understand how is the market responding to how is your trade, responding to current market conditions, your strategy. Okay? As I have just said, it's not a strategy. It's what we learn from the mechanics of doing something, learning to do it on our own, facing the trades, as I told you earlier, right? Know that this is the right moment, this is not the right moment for a trade. Okay? The data you get from this spreadsheet is not the most important thing. Because if you just need a couple of hours in the internet to find all the data you may want or need about any possible currency, right? Accumulating data is not the idea of the spreadsheet, of the Excel sheet. The idea of the test, of the manual test, of the Excel thing is to learn the mechanics of trading, okay? Doing the job day after day. Also, they are realistic. This is something Adam said, and I was laughing when he said it. I will tell you why. Because he says, don't overload the spreadsheet. When I started trading, I created a spreadsheet, right? Searching for certain results with a certain currency pair. There was a moment that I needed the help of an engineer to read what I had there. There were so many formulas, so many filters, so many stuff in my spreadsheet. I still have it. I will share it one day, right? Now, it was unbelievable. It was something impossible to terminate the trade with that. So better keep it simple, better be realistic, don't overload the spreadsheet with information. What you need to know is if the system works, where to place the stop, where you place your limit, and what's the average gain you will get at the end of the month. Okay? Anyway, and the fact that I guess you may want to know or ask about all the auto-testing systems we have today in the market. Again, the old school, it's against these auto-testing things, right? And I belong to the old school, so my apologies. I'm just sharing my personal opinion here. I don't believe that their tools are bad or maybe wrong, right? But what I can see about these tools is one that they have limited parameters, right? If you set a back testing with, I don't know, at 35.8 moving average simple applied to high, right? Do you believe that that's the best indicator ever invented, right? You are probably doing something wrong because it's not a moving average of 20 or 38.5 what will make the difference in between being a successful or a not trader, right? The fact is that all these auto-testing programs we have today work under certain market parameters, right? And when the market conditions change, those parameters are no more real, right? So the strategy will not be valid anymore. You need a strategy that can stay, right? That can be sustainable in time, okay? So, one more thing I would like to add before going into questions and into the practice, a bit of practice today, right? There's a couple of interesting tips Adam shared, and I would like to share with you, right? You know that relative strength index is an indicator that tends to show us oversold or overbought conditions in the market. What many of us maybe don't know or maybe don't remember is that we usually understand the cross of the 30 or 70 level, right, as a strong trend continuation signal, okay? When we are in the middle of a bearish trend, right, from a pair breaks below 30, pair and the study, of course, that will probably mean the price will continue flying and strongly. The fact is that most of the starters in the stock market read the contrary, said, okay, we are below 30, so the market will reverse. At some point, all markets reverse, right? But the break below 30 or above 70 is not the sign of a reverse. It's a sign of an acceleration, okay? On the contrary, if we are trading in range markets, relative strength index tends to stay in between 40 and 60. Why? Because the 50 level, just the midline of the relative strength index, is where the offer equals demand, and we have native strength in the market, not selling strength, not buying strength. When relative strength index hovers or stays flat around 50, right, we are seeing a range market, right? 50 is the line that separates bearish from bullish, okay? If the relative strength index is above 50, we understand the market is tending to the upside. If the relative strength index is below 50, we understand the market is tending to the downside. But if we take a look at charts and we see that for the last couple of weeks, hours, days, the rate index has been in between 40 and 60. Of course, it's not as bad as an idea, right? Then we know that the certain currency is in range and we don't have a clear trend, okay? He also used that relative strength index to identify the strength of the currency. I like it because I always said that trying to understand the strength of the weakness of certain currencies is the first movement we need to do in the day before taking trading decisions or even taking even choosing which pair we are going to trade, right? I would like to see which one is the strongest currency I will observe the movement, which one is the weakest, which one is not moving, right? I want to know that. I usually measure that comparing the number of pips a certain currency moves against the greenback, okay? If I say, for example, that the pound has been, I don't know, 150 pips against the greenback, while the 70 cents has been unchanged, I could say that the pound is stronger than the yen, right? It's a simple concept to how to understand the strength of the currency. What Adam suggested, and I find it pretty interesting, is to watch at the certain levels the relative strength index is against a certain currency, no matter you choose 70 cents, euro, dollar, okay? So let's say that we choose euro, right? So the euro Australian dollar shows you the relative strength index is of 28, right? And the relative strength index also shows you that the pound euro relative strength index is around 70, right? So you will find out, I'm making this up, right? It's just an example. It's not something that's going on for real right now. So compared to the euro, the Aussie is weaker and the pound is stronger, okay? So there you have the pound also a strong cross to trade at that particular day, right? And take a look at that pair. I know several of these crosses, right, tend to have wide spread. So maybe are not the best trading idea you can have in a day. However, if you have a strong trade in certain currency pairs, right, the probability of having the same strong trade in a trend, in a couple more of currency pairs related to those ones or weak ones, it's pretty high. So you can find where to start your day, right? Anyway, and making a pause of the theory and going up to the practice. Sorry, I'm closing the presentation and opening my chart. That will be noisy. Okay. Before doing that, I will take the questions and take a look at the comments. Ed says no lesson learned like real time, right? Exactly. That's what I believe that trading with demos is easy, and using a mini lot account is much better, right? That's at least my personal view, okay? You will be, if you're risking money, you are risking small amounts. And that you feel the pain, as you said, and that will help. And just as, do you have any views on the euro dollar? Yeah, well, we are going to play around right now with euro dollar chart. The fact is that all of you, if you follow what I do with coverage reports and trading strategies and so daily basis, you know I was pretty much more bearish in the euro. This is a good example of what's going on in life, or something happens in life, right? I will take a look at your question right now, right? The fact is that the euro was bearish. This is the daily chart, right? We're in the middle of a bearish trend. Of course, market reverses. Well, that happens. The fact is that right now, and from my personal point of view, this 31.45 area we are plotting right now. Remember, it was past October monthly low, right? The low, the lowest low set in a monthly chart after the yearly low in 2011, which was around 28.70, right? So for me, this is a key resistance level, right? This is a very strong resistance area, and should not be easy for the euro to overcome this area. But if it does, there's a good chance that the rally may continue and extend towards the 61.8% retracement of this latest hold around 136. I honestly don't understand, or I'm unable to justify euro strength right now, right? And if I have to trade, I would choose any other high yield buy, but not euro at this point, okay? If I have to sell green bucks, I would buy Aussie or Canadian bucks. I'm not going to buy euros at this point, me, okay? Because I'm fear I would see a lot of what we have seen over the past 3 months, that we see attempts of recovery, right? That did not have to be limited corrective movements and only increase the selling pressure in the technical point of view. In the fundamental point of view in the Eurozone, we are in deep problems in there. We are heading for recession. The negotiations between Greece and its creditors has been taking forever, right? And they are not able to come to a solution. It's always the same with the euro area. All these big crises they are facing is because they don't have in time to solve the problems, and they tend to delay and delay and delay. However, Bernanke Shaka told yesterday in his statement that he won't touch rates till 2014, that the economic policy remains accommodative, right? So that is telling us that the dollar will be losing probably its bullish trend we have seen over the past couple of months. That's why I said I'd rather buy Aussie against the green mark or any other thing than euro. I don't feel comfortable with euro. It's true that this past couple of weeks, the weaker currency is the green mark, but second weaker is the euro. So I would rather watch the weaker dollar against the stronger one, okay? Anyway, and to answer your question, I believe that if we close the week to space above this area, 3140, 3170, there's a good chance that the PMA may continue correcting. And the most I can see at 136, and I don't believe, not either myself in at 136, okay? But technically, that should be the target, okay? That said, I write in MetaTrader card test 3 strategies and what response against time of day of week, several big profit, economic counter. I have 30 years of programming skills to draw on when writing MetaTrader card. Every hour appears with 5 like lead testing over back testing. What steps do I need to do to make back testing highly effective in developing success strategies? That's a great question. I believe that you have a lot of experience in programming, okay? But now that you have developed that strategy in MetaTrader, right? And I'm more like Adam, right? That they will live testing, the back testing. I do believe that both are part of the same dog, you know. You need to do that back testing and it's great, but you also need now to start putting that lead, okay? And see if you can do it in a demo account, okay? But do it as if it was real money. And if it works in in the demo, try it with mini logs. And if it works there, then you are ready to go. Your strategy works. However, this your strategy consider that's your strategy consider. Sorry, if the market is trend or it's in range or if we have how high volume, how volatility, I would recommend you to take a sample not bigger than for doing back testing, right? Not more than 2 years in the past and waiting more the latest 6 months results. If you can do so, would be the greatest. Okay? But back testing is effective. Nice, do it live. Okay? If all those maths you have done work in real life. If you are able to pull the trigger at the right moment, if you are able to set your stop and your limit and live with it, okay? Some of us have a lot of problems to live with small losses, right? And one thing that I did on my back testing, and I found out that it was pretty reliable, um, at least for me, that gives me more confidence in my trading, is to once I have back tested 2 or 3 years to the back, check how many losses in a row I may have with that strategy. Okay, maybe you have a gorgeous, perfect trading strategy that gives you an 84% a month, right? But in the middle, you have 5 losses in a row, for example. Okay, in the middle of that month. So if you know you have 5 losses in a row, then you will tolerate that. Okay, if your strategy reaches a point that it gives you 6 losses in a row, well, then it's time to review your strategy and go back to the back testing. Because we like it or not, market condition changes, okay, and strategies did not last forever. Gold says, is this trend changing in euro? I'm not happily going to say yes, but think so, gold. Rather than a trend change in euro, sorry, I have prepared this to discuss trading strategy. Okay, let's take a look at all the markets, right? Rather than talk of the trend change in the euro, and I know everyone's focused on the in the euro, I would say that it's a trend change in the dollar, right? The greenback is the one that's being under strong selling pressure, okay? However, I don't know. Let's take a look, for example. From the low of January to current price, euro has rose 500 pips. Okay, from the low of this month, okay, to current high, well, more or less the same Australian dollar. Okay, I was expecting us to have rose more. I know pound has did less. But anyway, back to what I was saying. It's dollar that is changing the trend. I'm not so happy saying that the euro is going to change trend and continue gaining. I fear all the chaos in the financial tech chaos we have in the eurozone. I could say that above this 38.2, then maybe we will have confirmation, stronger bullish momentum in the trend change. However, as I told you, I'd rather not buy this fear, not right now. Maybe next week I change my mind, right? But it's my personal view of it. So, on a typical day, how many losses do you get in a row? No more than 2. If I get 2 losses in a row, I close everything. Because regardless the trading strategy, regardless the years of study, or regardless anything, we are human beings. You know, we are human beings, and we have bad days. We discuss with our habits or our wife. Or what? If I have 2 losses a road in a day, I close my platform and move away. I may have, yeah, I have a bad day. Something's not right, right? So I close everything and move on. Okay, but I don't trade as much. No, I'm not a super trader. I'm just a human being. I don't know. It's with, again, the market, it's not depending, as we said earlier, it's not depending only on the trading strategy, but our personality, right? And that is my personality. I understand that about myself, right? That after two losses in a row, the first thing I tend to do is to take revenge, right? I want to take revenge so badly, so badly. So I will probably be doing something silly, right? Knowing myself, I'm talking about myself. So the best thing I could do at that particular point of the day is close everything, go cool off away of the market, and return fresh whenever I feel. Later or maybe the next day, probably the next day, okay? Gold says if it goes above the present level, we might see higher level. Yes, probably. I believe that this 3140, 70 area I told you is a strong technical resistance area. So if we go higher, then we will probably continue towards 36 or so. Dog says, I agree with you about backtesting 6 months and 2 years. My target at least an 80% success rate on the trade strategy before. 80% is reasonable. It's extremely good. I will be happy with 70 or 68. That will be enough because consider that the fact is that loss is a part of the job in here, right? Losing a trade does not mean you're a lousy trader. Does not mean you're a loser. We have to leave this thing aside, right? So as long as at the end of the month you end winning more than what you lose, then it's a matter of balancing the leverage you use in the market. But of course, you have to be 100% sure of what you're doing to risk a bit more leverage higher, right? And get more money with the same average percentage of monthly winnings. Like I said, above 68, that's the best, okay? I get like 3-5 normally for transfer. Well, I don't take. I will say that I won't reach the 3, no way, because if I reach the 3, I will probably pass the 5. Gold says it's Aussie getting the buy Climax. I believe that Aussie has already got it, and we will reapproach it, heading towards 770, 750 price zone, which is also strong. Quite strong. Sorry, let me turn on the camera. A strong area, right? 770 area around here. Let me plot a line, more or less. Okay, around there. We have so many daily highs and lows and retracements from that area. So right now, that is the target for us. As long as we remain above 550. Okay, 550 is the first strong support we have right now. So at this point, it's heading that way. Okay, if we reach that level, the behavior of the currency pair there will be key. Okay, behavior of the currency, the price. Because if we start retreating strongly, well, there's a little chance of a break higher, and on the contrary, there's a chance for break lower. If price stays close, like in this case, and consolidates and push and push and push and push day after day, there's a good chance that we are going to see a break higher, probably towards 110 higher area. Okay, that's about consolidating near strong resistance support area. It's valued not only in daily charts but also in smaller time frames, right? If you see price pushing and pushing and pushing, the higher chances of a break. If you see price reaching the level and turning quickly on the other way, like in this last case, okay, the trend will probably reverse, as we can see in here. In our indicator, just take a look at the price. Anyway, I wanted to share with you a couple more things, but time flies, okay? Um, the thing that I wanted to share with you, right? And I will make it brief, okay? So we don't extend too much. The girls have to go home. But, f3.com, but the fact is that, when Adam presents his webinar, right, another strategy, one of the strategies he suggested was using three moving averages. I know we tend to use, because sort of speaking, right, traders tend to use 50, 100, 200 because everyone looks at them, right? And the fact is that using a short-term moving average, in this case the light blue one is the 4-1, okay, it's more sensitive to price changes. If you are using a 50, 100, 200 moving average, let's plot them in here, okay. Let's plot them in here. 50, we are going to use the scale of pink. 50, let's add a 100, 100, okay, and a darker pink, okay, and let's add a 200, okay, in an even darker one, okay, there we are. Let's go to daily chart, right? The problem with using this big moving average, either in the daily or in the small time frame, no matter, I choose daily because it's this one, it's because they are not letting you know on time of a trend reversal. See what we are seeing here, right? The three moving averages are that besides the last one, the 51, the shorter one that was overcome today, the three are still bearish and above current price, right? But in the middle time, the price has lost 150 pips. So if we were strongly bearish in this particular price, wait for moving average to reverse, right? To see the trend reversal, this long moving average, right? Will take too long, okay? I'm taking the daily chart, okay? And in fact, we did have a confirmation of a reversal around 129.60 in the hourly chart. Again, far away from the bottom, okay? However, if instead of using 50, 100, and 200, the typical cluster one, you change to, okay, a shorter time frame, moving average that in fact is a price follower because it reflects price changes at the moment, like this one that I was saying, the 4-1, right? You will understand, or you will notice in the market pretty faster, right? The change in the trend. You will notice it and much faster, because in this particular case, the 5 overcome the next one. The medium one is a 9 and the other is 19. It does not matter the this frame, right? But in this case, it was just 130 pips away from the bottom that we have the first sign that the trend may have been reversing, or at least in the middle of a strong correction, in contrary of the bearish dominant trend, right? So sometimes, usually, the more sensitive moving average, short-term one, it's much more profitable than using the big classic ones that everyone is watching. And sorry, not that one, not that one, not that one. Where is the one I was trying to show you? Okay, that's okay, this one. What I was trying to show you in here, I will select a couple of indicators, okay? Okay, that's this. Sorry, okay, there we are. Okay, both 1 hour charts, both for Eurodollar. In this particular one, okay, I'm using momentum indicator and a 20-cent moving average. The trading strategy that involves momentum indicator and a simple moving average sets that a vertical cut of the 100 level in one side of the other, while we have a candle opening on the opposite side of the 20 moving average, right, is usually understood as buying signal. So we have the strong cat, the momentum also vertical in the hourly chart, and the candle opening above the 20 simple moving average, right? This particular candle, okay? I will move the line so we can see. As you can see in the opening of this candle, the blue one, the candle opened at 130.50 and the low was 130.48, right? If we trace 2 pips, this one, the next one, low was 42, 8 pips below the entry, right? But the bullish signal has been pretty much profitable in a couple of hours, in more or less than 10 hours. It has given 130 pips, right? Again, and this was the candle that gave us the signal, right? See what happens when we use 3 moving average. Where is the buying signal in this perspective? We have a 4, a 9, and an 18 moving average, right? The 4 overcomes the 9, giving us the first signal. But when both are above the 1, when it finally cuts the last one, the 18, is when the market really is ready to continue, right? And if you take a look in this particular case, the entry signal was exactly around the same time, right? We have the same buying signal using different market strategies. If both are good or bad, that's something you should test. I always say, this is an United States MetaTrader, right? And candles are different from United Kingdom MetaTraders or the candles in any broker or the Australian ones, no matter the broker, no matter the graph chart you're using, the chart system, right? Early candles tend to open with a couple of minutes difference, and 4-hour candles tend to open with several hours difference, and daily candle also. So candles are different. So the indicators will show different information. Okay? So any trading strategy you see from this side, you need to test it in your side to confirm if it's profitable or not. Anyway, this is one of the best proofs you can have that it's not the trading strategy what it works, but to learn to use indicators and how to. Most of the indicators, right, are giving us just the same information. Okay? Anyway, I will check if you have, sorry, I will remove the camera first. Okay? Okay. I will answer the last question, sorry, as it's time to close the webinar, but as usual, pleasure. Gold, I think we are moving to that level now. Yes. Yes, towards the 750, 770 area. Dow says 878 is, yes, it's achievable. You're welcome. And Joe, no, I'm not doing the webinar, okay? But you can find a report a bit later, around 22:30, around 22:30, 23 GMT. I publish a report, okay? It's technical perspective. I was using tab, sorry. I published that report. We are not doing the live webinar, but you can see the information of the 4 majors there. Okay, Joe? And thank you all for being here. Sorry. Thank you, Vicky. And we'll see you back soon, okay? By the end of February. I'm taking some vacation now. My standard time. Thanks. Really. See you soon. Bye-bye.